I'm going to be reacting to part 2 of the Economic Ninja's Amazon Insider Report. If you saw the first one, I made a reaction video on that too. You can go check that out on my channel. But this has been a very interesting insight. And I thought, when I watch these videos, I think, God, I wish I was watching this with someone. I wish someone else cared about this stuff in my life. So I'm an investor and I'm going to be reacting rather to what he's saying here. I haven't seen this video yet. So we are going to be watching it together. I'm excited because the first video was great. Let's go and watch this video now. Let's get to it.
Hey everybody, Economic Ninja here. I hope you're doing well. This is going to be part 2 of what I need to do in actually a three-part series on these notes that I obtained from an Amazon meeting. And this is not for the lower level employees. This was for upper management, talking about the economy. If you have not seen part 1, what I'll do is I'll put a link up here. Stop this one, pause it, go to part 1, because I'm having to break these notes down. And it's very interesting what Amazon.
Feel free to watch his whole video. Feel free to watch my reaction to that first video. It was very good. And by the way, be sure to hit the subscribe and notification bell on my channel here so that we can do more of these, watch more of these videos together, and you'll actually get notified when they come out, because timeliness matters and a lot of these videos are important to watch when they come out. So let's get back over to it.
The upper management cares about. We talked yesterday about commercial real estate and all kinds of lending issues with the banks. They're watching this because they're watching their customer go away right now, and it's dwindling fast. And it's going to ramp up in these next 2 videos. The notes that what they're talking to their management about, explaining why they're closing down these fulfillment centers, why they are laying off employees and things like that. So what I want to do is on this video,
don't lay off fulfillment centers if you have more orders.
From the first video, consumer slowdown online. The February 9th signaled that Amazon USA marketplace of consumer audience has lost its appetite for things sold online. I honestly looked around. I can't find anything for February 9th that was significant, and I can't just go around asking people at Amazon, say, hey, if there's anybody that has an anonymous account here and works for Amazon upper management, let us know what happened on February 9th, because that is very, very.
So I live in Seattle, and I'll tell you, they've been announcing more and more layoffs. So now a lot of that, I believe, is the actual headquarter workers, like your white collar, your tech workers, not the actual fulfillment centers. But with that being said, you expect that to go hand in hand. Some of it has been fulfillment centers because we have a couple of fulfillment centers here also. They're all over the country, all over the world, really. But I can tell you that tens of thousands of people that work at Amazon have lost their job here in the past several months. And that doesn't seem like it's going to be slowing down. Okay. So I just want to add that in quick.
Very interesting. All right. And them talking about another 27,000 people to be laid off, scheduled to be laid off at the end of this month.
Wouldn't surprise me.
My heart goes out to people that are losing their jobs,
no doubt,
honestly. And that's what I've been trying to warn people about for 2 years, getting ready for this event, to start a side hustle, get some kind of other form, another job, a secondary line of income coming in, because you just don't know, and honestly, 2 years ago, I would never have expected AI to be exploding like it is right now.
That's true.
I knew it was coming, but to watch it happen, open up like ChatGPT from December to now and see how it's transformed. Holy cow, it's crazy. All right, so let's dive in now.
Yeah, let's dive in.
So the first on these notes, here's a bit of information.
Pay attention.
China continues to have production and quality issues, and freight has dropped in price, but duration of time and logistic bottlenecks have pushed the just-in-time business models. Companies with space and access to capital overbought and are now dumping excess goods to non-interested consumers nationwide. So this is something that we spoke about over a year ago, where companies were panicked because they couldn't get stuff to sell. And we started to see, literally like aisles in Walmart go completely bare, right? And that Walmart and Target and all these massive stores, Costco, this is like real estate to them. They know per square foot how much they should be earning. So they only put products that they can sell, right? They put the best out there, because if they're not selling, they're not making money. Well, it's one thing to have product on the shelves that aren't selling because the consumer doesn't have an appetite to buy them. It's a whole nother thing to have literally empty spaces,
Yeah.
which means you don't have anything to sell the customer, but also it puts your store in a bad light, sort of gives the customer a uneasy feeling of your management practices, things like that. And upper management understands this, and that's the last thing they want.
Isn't that true? When you walk in somewhere and there's like bare shelves, it feels different. It feels strange, doesn't it?
So a year ago, we were showing you pictures of like Walmart's out at my local Walmart where they had an entire 2 aisles of these cheap plastic uh, Coca-Cola bottle piggy banks. It was the most ludicrous thing I've ever seen. But I understood what management was thinking, and they had 2 full aisles full of these cheap plastic bottles. They must have been like a foot and a half tall a piece, right? We're talking literally well over 1,000 of these things. But they knew that they had to fill space. They had to show and give the presence of things to be full. And I don't know if many people know the story of the beginnings of Home Depot, but when they went with this model as the first of its kind to go with this hardware store that was a big box warehouse, they wanted to give the appearance that the reason why you were getting such good prices over your local Ace hardware store or other hardware stores in your area was because the store, Home Depot, the company was buying in bulk. And so when they started their handful of stores, they actually went out to the manufacturers like the Milwaukee Tools and things like that. And they said, okay, we'll take like 100 tools and we'll take 400 extra boxes. They're like, what are you talking about? Like, we need your cardboard boxes. We need to stuff all of the shelves. They did not have the money to fill these few warehouses that they started,
Ah, that's
but they
interesting.
had to give the idea that, oh man, there's tools in those. There wasn't. It was all facade. Okay. But what they wanted to do is give the customer that feeling of this is different. This is exciting. I'm buying in a warehouse. It's like I'm the supplier. I'm the store now. I'm
Yeah. Like I said, it feels different when shelves are empty, when things are light. You feel it doesn't feel good for a multitude of reasons.
going and buying these tools and I could go sell them. It's absolutely amazing, but it has to do with the psychology of the buyer, and Amazon understands this. All right, so China's having these issues. So they're literally companies that have bought all of this excess goods now are now finding themselves in real trouble because they have bloated inventories that they're being taxed on. Most people don't, a lot of people don't understand inventory tax also. You know, government set up our
It's a
government set
good
up
point.
this inventory tax to where companies could not go and buy up all of one item and create a monopoly and run the price higher, right? So the companies get taxed on this. Well, they found themselves buying up all this excess goods. Now they're being taxed on it, and to double that pain, they can't sell it to the consumer because the mind shift has changed. And I can tell you from experience back in last June when I said, okay, that's it. We're at the top of the real estate market. You're going to see it now come down in price from here. It's because
Yeah.
the mindset of the consumer just shifted. And it literally, I'm not joking, that effect happens overnight. It is crazy how fast it happens.
It's a
So
tipping
that's
point,
something that Amazon's
is what it
watching.
is. That's why it
The
feels like it's
next thing is
overnight.
return products sold online are over 12% in March of 2023, triggering Amazon to include return rate scores on high volume ASINS. This is crushing volume products. You know what? Let me do this real
Let's
quick.
let's let's hear that again. Let's hear that again.
ASINS thing is return products sold online are over 12% in March of 2023,
Wow.
triggering Amazon to include return rate scores on high volume ASINS. This is crushing volume products. You know what? Let me do this real quick.
Huh.
ASINS. I had to look up a lot of these acronyms because I just don't follow it.
I return a good number of things to Amazon. What about you? Drop in the comments. Do you return stuff to Amazon? A lot of things that I get, they're not what I expected. And so, I order a lot of things from Amazon. But I wouldn't doubt if I return 12%, like he was saying, of the stuff that I buy. What about you? Drop the comment below. Hit the sub and the notification too, so we can watch more of these together.
So this is ASINS stands for Amazon Standard Identification Number. It is a 10-character alphanumeric unique identifier assigned by Amazon.com and its partners for product identification within the Amazon organization. So they're saying right here that uh, it was triggering Amazon to include return rate scores on high volume ASINs. This is crushing volume products. Very, very interesting. I got to be honest with you, as I'm reading these things, my mind is just spinning, contemplating or thinking
They're
about
saying there's
what upper level.
I think he's having trouble processing it. What's going on is that they're having a high return rate on high volume products to the tune of about 12%. Now, most companies, granted, I'm not exactly sure what Amazon's particular margins are, right? Because people sell through there. Amazon doesn't buy the product, they just fulfill it and they charge a fee for stocking and delivering, stuff like that. So I can't imagine Amazon makes more. Let me look at you a little bit. I'd be surprised if Amazon made more than a 3% margin on products that are sold. So a 12% return rate. Now, they didn't buy the products, right? In Walmart, they buy the products and they put them on their shelves. They have some kind of obligation there, sort of. Amazon doesn't, because me and you, we can just go send products to Amazon. They'll put them in their fulfillment centers. They'll list them on Amazon when they get bought. They'll take a piece of it and they'll charge us fees for inventory, storage, and delivery and fulfillment, stuff like that. So they don't have so much the product costs, although they do have a lot of their own products, right? Sold by Amazon, Amazon Basics, stuff like that. So I don't really even need to know their exact margins, because I know 12% is more, significantly more than what they make from an actual profit standpoint. So a 12% return rate on high volume products, that is a big loss, is what that is. That is a big opposite of profit. That is a loss on the P&L statement. Let's go back to the video.
Upper level management in Amazon is going through right now, trying to get these wrongs right. Crazy. All right. So now they also came in and said more sellers are opting for 3PL direct to customer shipping to dodge FBA fees. This has crushed the FBA model. So again, I had to get the definitions for you. So the first, more sellers are opting for 3PL. 3PL stands for, let me go to it. It is responsible for managing and coordinating transportation, warehousing, inventory control, order fulfillment, customer service, and other functions involved
in other words, instead of giving your product to Amazon and letting them warehouse it, fulfill it, which is the easiest route, they're choosing to sell. And because you and I can list on Amazon. You and I can list on Amazon, and we don't need to send our products to Amazon for them to fulfill. Although most people, you and I, we typically buy the things with the Prime label, right? Those are the things sitting in the actual warehouse in the fulfilled by Amazon, FBA. Okay. But what he's saying here is that a lot of people, a growing number of sellers, are choosing to ship the products themselves and skip the Amazon fees. In other words, they're seeing it as more, they're doing their own warehousing. These are bigger sellers. These aren't really tiny mom and pop sellers selling a few things. These people selling probably at least hundreds of products a day, choosing to get their own warehouse and shipping and logistics solutions because it gives them a better profit margin. Okay. In other words, sellers on Amazon are getting more sophisticated and they don't have to lean on Amazon so much, meaning Amazon itself doesn't have as much leverage on the sellers. Okay. That's what's going on here. Let's go back to the video. Let's hear him read the rest of it.
Moving goods from one point to another. So it says right here that people are opting for 3PL direct to customer shipping just to save these FBA fees. And FBA fees, FBA stands for
Fulfilled by Amazon.
Fulfillment by Amazon. Yeah, just unbelievable what they're having to go through right now. It just shocks me, like in the first video, where they're really concerned about the banking crisis and real estate, because again, this is something that I've been trying to pound into people's heads for years now. Real estate is the greatest wealth effect there is. And if you don't think that Amazon has spent literally tens of thousands, hundreds of thousands, if not millions of dollars into learning the psychology of the buyer, you don't know how these companies work.
Real estate, what he's saying, it's the best store and growth vehicle, most reliable of wealth. That's what he's saying. It also is the biggest indicator of wealth effect, which is where you and I, individuals, it makes us feel richer when our properties go up in value, when our assets go up in value.
They have dove tons of money into it. And that's why they care about the real estate market and the banking crisis just as much as you do.
And we're talking about many trillions of dollars as a problem here in terms of a financial crisis with these commercial mortgages. Remember what residential mortgage problems did in the great financial crisis in 08? Well, there's even more money in these commercial loans than there was in the residential problem. And about 2% of residential mortgages had problems. From what I've been reading, closer to 10% of commercial mortgages now are having problems. And that mainly affects small regional local banks. And those banks are also dealing with a constant outflow of deposits, people taking their money out and putting them into money market funds, treasury bonds, or bigger, too big to fail banks.
Now let's see here. 1, 2, 3, 4. Let's move on to the next video because I don't want to make it long. And so I'm going to put video 3 and I'll attach it up here. And when I come out with it, I think it'll come out.
So that's the end of this video, it seems. So he keeps diving into this report, and it's really, really good. It's a really good report. I really dig it. And I can really relate. Let me just go maybe here like this. I can really relate with what's going on here, and it's something to massively pay attention to. Again, the biggest thing about this report is that insiders at Amazon, they're talking about, yes, today in this video, he talked about their actual internal numbers, but the biggest thing they've been talking about is external to them, which is the commercial real estate market at Amazon. They're concerned about that. They're concerned about a weakening consumer. They're seeing it in their numbers, and they're concerned about a much bigger bombshell going off with the regional commercial banks, regional banks, and their commercial assets, commercial mortgage assets. Like I was saying, I think in the last video, today I was just reading the paper, April 13th, 2023, and on the Seattle Times, on the front page was this building, this beautiful building. It was built on the waterfront, not in downtown Seattle, but southern Seattle. They started building it in 2019. It got finished recently, and the developer gave the keys back to the bank. It was a $250 million project, $250 million. And now the bank is going to be putting that asset, that building, up for auction. They're not going to get $250 million, which is their liability on it. They might be lucky to get 60, 70%. Those banks can't handle that. Plus, they're dealing with depositor outflows. There is a monster lying underneath all this. And we had the CPI report come out yesterday. We had the PPI come out today. And things are looking good. People are feeling bullish. The stock market's up. The S&P 500 went up well over 1% today. I think about 1.25% or so. Crypto is on the rise. I feel like I don't know how much further this can go. We still have a massively inverted bond yield curve. We have some of the largest volume of shorts that have been put on in the market in 10 years, and that got put on the day before the CPI, so that would have been the 11th, 2 days ago. And with this commercial real estate thing going on, this doesn't feel like we've bottomed. I think that it's very possible we have a much larger leg down stock market wise, because I really think that we're going to land somewhere in the low 2000s. We may even breach to like 1800, which is a much less scenario. Most of you are probably scoffing at what I'm saying, but listen, I'd rather plan for the worst case scenario than be that eternal optimist and be caught blindsided by things that I could have planned for. Does that make sense? Hit the subscribe button, hit the notification bell. We're going to be doing more reaction videos like this. I hope you found it useful. Other than that, take care. Seriously, take care of your finances. Not financial advice.